Well, hello everybody. It's midweek update time. Joe with you here. It's the 27th of April. Let's get into the markets as we close out um, April, right? Geez, is that a spring month? I think it is. But we are into the first, or I should say, the second quarter of 2022, and not a very strong finish to this month. Let's get into it, guys. I've got my 2 cents. I've got my ideology and what I think these markets are doing to themselves. Make sure you take responsibility for the outcome of whatever you follow. Yeah, you guys get it. All right, so all three of the majors are testing. March lows are approaching them. In the case of the diamonds, I see this as a round of profit taking and a cautious approach. I do believe that it's going to be driven by earnings. You've heard buy on rumors, sell on news. Well, folks, this is exactly it. We are seeing selling on news. Some of these numbers are not good at all. Uh, so, uh, so keep that in mind. But I don't think traders were expecting the numbers to be very good. So I kind of was expecting this. I wasn't sure when it was going to happen. I thought it was going to be the first quarter, and it wasn't. Turns out it's going to be the second quarter here, and a lot of it has to do with just a slowing economy, and it has nothing to do with that the economy is slowing down. It's just I think the demand that we saw during the COVID year is, can I call it years, a year and a half or so, was accelerated. Now we are kind of at that peak. I know that Corey's mentioned that we might see that we were at the peak of inflation. Boy, I sure hope that's true because I don't see signs of us slowing down yet. Well, that's not true. The housing market looks like it's slowing. But consumer spending, not so much. And even this round here, folks, I'm calling it profit taking and a cautious approach because the VIX, pardon me, the VIX is not falling. I mean, spiking. I mean, it's higher than we've seen it in a little bit, but it's still not at the peak that we saw even in February, or I should say March's lows. The panic that I'm looking for will be ridiculous, and that's my 2 cents. This is just corrective action. Let's take some profits. These companies aren't going to produce what we expect them to, and we're at the lows. But this isn't the flush out in my opinion. So inflation indicators remain high. Advanced trade in goods increases to record. This is another problem that I don't think we feel for a month or so. China had to slow down a little bit. Another round of COVID, I believe, or something like that. But there is a bottleneck of exports. And yes, folks, if you don't think we depend on China's exports, just take a look at that number: 216 billion in deficit difference between our imports and exports. We consume hard, and we consume strong, and we don't get our stuff, we're gonna get mad, right? Okay, well there's my soapbox, but we'll see. Once again, if we can keep this pace with inflation, then inflation could take its time to peak and come back down. For now, we seem to be doing okay with that, but we'll see if we start to slow, and hopefully we do it at the same time. Here's some trade ideas. PEP, folks, is great. Delta Airlines looked pretty good. I pulled that from Corey's end of day yesterday. We have the Dr. Pepper in the neutral side. Unfortunately, folks, I pulled it and I did look that Dr. Pepper actually announces tomorrow before the market. So that's no longer going to be a good neutral trade. We'll look at it anyways. Twilio, Fedex, and Garmin also looked really good on the bear side, just kind of pulling them from Rob and Corey, as well as our class last week. So here is PepsiCo, and look at that. It is hanging in there. It looks like it's pushing higher. I'm not sure if this is earnings or some sort of a news to it, but I do like it as a high ascending triangle breakout. It is pretty interesting to find something this strong in the markets that we've seen this week. I do think that, well, I'll just go ahead and give you my outlook, folks. I do think that we do bounce in the next day or so, if not today, and we bounce pretty aggressive. So this might benefit from that to the upside. So I like it. A diagonal spread. I do like what Rob was talking about. If you want to absorb this volatility doesn't mean down necessarily. It means back and forth. Then a vertical spread would be cool. You just got to get right on the date, the expiration cycle. So keep that in mind as well. But I like it. I think it's a nice chart. This is Delta Airlines. Once again, I'm putting a lot of emphasis on today, thinking that today could be at least, I do think the market's park it here. If not, just consolidate. Maybe they'll flush a little lower, then come right back up. But this is where the support level. We're approaching March's lows, and I like this pullback. I like the doji that it had 5 days ago, touching 46. I like how it came back, and it's kind of establishing that support at 42. You could see it bounced off that mid-February and kind of consolidated in January between 40 and 42 before it dipped lower. So I like it. You can add all sorts of different things. I know for you fundamentalists out there, we are getting into the traveling season. We'll see if Delta's going to do well and people will buy tickets, although they are in a little bit of a pickle due to the fact that they got to pay a lot for gas, but I'm sure they're going to put it right back on to the consumer. So we'll see. We'll see how the season goes. It's early yet. Usually with a company like this, you won't be able to tell how they did until the end of that fourth quarter, right? Third or fourth quarter. How did the summer go? Well, fine. I'll tell you in the third or fourth quarter. So we'll see. But I do like the chart pattern regardless. Here is our Keurig Dr. Pepper, and it's a beautiful consolidator between 36.5, 39. We've seen this a handful of times, and it's still a good consolidator. I pulled it up. As I pulled up the chart, folks, and I got the class going, I realized, oh, geez, I scrolled down. I saw that it does have earnings tomorrow. So we'll take it from there. Maybe you see if you guys want to see if it's going to break outside, above, or below based on its earnings, or if you're really interesting, and I've seen traders do this, you could put a condor outside of it, bring in a large credit, thinking that it's not going to break up or down outside of this range, regardless of its earnings. Yes, folks, you can take both sides, either a breakout or a non-break. It's kind of fun. But anyways, I'll leave it up to you. Let's get to Twilio. Twilio's been on our bear watch for a while, and it confirmed below the 140 mark. I thought that was interesting. It's definitely confirmed above, what are we going to call this? Boy, I thought I zoomed in enough, but you can see about 4 days ago, 3-4 days ago, it was breaking down against that March's lows. And it's just kind of bleeding lower. I mean, it's actually doing a little bit more than that because this is a pretty big mover. So give it a wide range, right? This is something you don't want to really put diagonal spread on and put a stop on it or anything like that, or straight call. If you do a straight call, do not put a stop on it. Position size for put. If you do a straight put, do not position size for max loss. Do not attempt to use stops on something this volatile. Now you might take $2 out of it, but if you're shooting for 30 or 40 bucks, you'll be upset you did. So give it enough range. Fedex is one that popped up yesterday. I thought this was really cool, and we got confirmation today. It hasn't really flushed itself out or anything. Once again, I did not get to check earnings on this one when it happened or if it already has, but I do like the chart pattern. Looks really nice. And then here's Garmin. Another one that is one to watch. It's not quite there. I would feel more confident as this broke 106, maybe 107.5, whatever the low it set on February. Right through here would be pretty good. But there are some decent trades out there. Expect volatility. Now, guys, the VIX did spike, and I'm going to give it to Rob and Darren, and boy, they nailed it perfectly on Sunday's trading room, that they expected a flush out and then a bounce, and that's exactly kind of what's happened. I think they expected it Tuesday. We're just a day late. It might happen tomorrow or even Friday. So, but I do think that we stop and hesitate at these levels. Looks like we're doing it right now, but they nailed it when they came to how it was going to happen. However, Darren talked about, or I don't know if it was Darren or Rob, or a combination of both, talked about the spike in the VIX, saying that, hey, it's pretty significant, and it is, but it's significant enough to put us down on these lows. It's not significant enough for people to bail. And now that I'm back on my soapbox, I'll just go with it. There's a round of profit taking here. There's still too much money in these markets. Gosh, it's funny for me to say like that. That's just my opinion. There's enough money in the markets. There's enough money in the markets from people that aren't worried about the money in the markets. Until traders need that money out of the markets to pay for their mortgage or to pay for higher milk prices or gas, then we're going to see the snowball. That's going to be the panic. Maybe I paid too much for my house. I got to make this mortgage. I'm just going to go ahead and sell some of my Bitcoin or sell some of my GameStop. As soon as we see people pull their money out of the markets for these things, then we'll get the capitulation. Then you'll see the spike well above levels that has been in the VIX, and we'll get the correction. But until then, it's still fun. It's still okay. People are more than happy out there spending money, and the economy is still chugging along. So I believe this is going to be very similar to this point than we saw in March. I really do. I think we get a bounce. Everybody thinks that's it. That's the end. And we start to climb back. Because take a look at the performance here. The Q is down 7%, over 7, almost 8%. Russell's over 6.5%. Spider's down 5%. I mean, yes, there's an absolute argument to be made that that's it. That's enough. That's enough correction. Let's go back to the races. Now, I didn't do this because I ran out of time, obviously, folks. But if you pull up a weekly chart on any of these, we have significant levels lower than this that we can hit and still sustain an uptrend. Keep that in mind from year to year to year. I'm talking about a weekly chart. So take a look at it. It's pretty interesting. So gold loses a little bit. Oil's down. Russell's down, so on and so forth. Let's take a look at the overall charts, because what was really interesting, guys, is I pulled out the sector strengths, strongest sectors and weaknesses, and this is a general pull out of money. This is the first round of profit taking, or I should say pulling out of institutions pulling out of money and maybe reallocate based on some of the earnings. And I'm going to leave it as that, folks. This is up to earnings right now. So I think earnings is driving this market. I think that the institutions are reacting accordingly. But when you saw that one of the biggest losers was energy and industrials, it's a big round of profit taking going on. Okay, here's the SPY right at these support levels. Once again, I love to echo this. When you come out of a candle that we had on Friday, it's very difficult to say, okay, guys, I'll see you down at 400. It's super difficult. And then you get a gap down, trades higher. That's tough. And then you get a gap up that trades lower. This is the volatility. So that VIX spike that we're seeing is telling us that, hey, we're going to gap up, go down, gap down, go up, so on and so forth. It doesn't mean that we're going to go down 3 days and that's the end of it. Or we're going to go down 5 days and that's the end of it. And it's sure as heck not the whole flush out capitulation, because that VIX will spike. I'll say it again, folks. I'm thinking upwards of the 40s and 50s. So that's my 2 cents. We find ourselves on a pretty good support level right now. This looks pretty decent. It's pretty cool. I absolutely expect these markets to bounce over the next day or two, or at least consolidate. I wouldn't be surprised about a gap down. Here we go, folks. Here's a great example. A gap down, and then a move back up, right? Now, even with this, folks, I don't think that the VIX got over 40. It hit like 38 or 30, high 30s. But that was enough to create this move. And I still think that we're in a market conducive to be able to sustain that until the consumer gets freaked out and starts to pull money out of these markets for livable expenses. I could see another move like that. All right, let's get on to the diamonds. Let me also get rid of my scratches here. And this one's a little bit stronger, right? We've been talking about this. I still think it's a pretty strong, almost a head and shoulders going on. Sorry about that line, folks. It's a little off, but I think you get the gist of it. It has, to retest these lows, room to move lower. The 325, 320 mark. In fact, folks, I believe if you pull this up on a weekly chart, it's down at 300 to be a pretty strong retest. So there is a ton of move to the downside left on this. Whether we do it or not, that's up to the institutions and up to the traders. And I do think it's going to be led by, the economic pressures are there. A bottleneck out of China with another round of COVID, a war in Russia, higher inflation, worries about energy prices. I mean, it's there. It's there. There's more than enough reason for this to continue down lower. However, on the home front, we're richer than we think. And I think, if we can get the numbers of earnings to stay not horrific, but bad. However, we could see ourselves climbing out of this at the end of the year. He's optimistic. Then yeah, I don't think we might need to see as big as of a correction. So it really is up to what these numbers are, and more importantly, how the consumer deals with it. So we'll see. It's so difficult to play with. Let's get to the Qs. Definitely the weakest. However, taking a look at today's action, it's definitely hesitating. Expected. I don't know how far up or down this goes. I don't think we budge too far without some sort of a snowball, meaning we need something bad to really flush these out. Maybe continued earnings that are less than favorable, or something good, something optimistic that could bounce it up. But I think we consolidate, have maybe that exhale or inhale, I should say, 2 or 3 breaths up, and then see if we can't retest these lows and go from there. All right, so there's your charts. Pretty pessimistic looking, but they are at support levels, so it's going to be a little bit difficult to gauge anything over the next 3 days, right? But if you think we're going to take a move higher and then roll over, then absolutely throw on a bear for late May. Or vice versa. We think we test this, we consolidate, we move higher, then throw on a bull for the next 2 weeks, right? Just depends on your outlook over those time frames. So durable goods orders, inline home price index, actually higher. Now, I think home sales, there it is, it dropped a little bit. All sorts of articles about that's the first sign of the end, and I've read it a million times. But the advanced trade in goods, folks, is not good. that's something that we won't feel towards the end of the year. So that's scary. But once again, it could peak at the same time inflation does. I didn't get the pending home sales number. I searched all over the place. It wasn't posted, I guess. I don't know. I didn't see it. But we'll have jobless claims, continuing claims, the GDP Q1, the PCE price index, which is one the Fed hovers over. Remember that, guys. They hover over that one. There's 3 or 4 different ones of that. There's 3 or 4 different personal incomes and consumer spending numbers now. So you might see 3 or 4 different economic firms giving you numbers. But that's generally what we're looking at on Friday. And then Chicago PMI and the consumer sentiment. Past that, it's kind of more of the same. You got a hawkish Fed. We know inflation's there. We don't know if it's going to peak or not. And the interesting thing is, if peaking inflation is enough to turn us optimistic, that's one thing. Once it peaks, and Corey made mention of this yesterday, it's like, if it comes down from 8 to 7.5, we're still at 7.5. It's still horrible. Prices aren't going to come down the next day. Hey, we peaked. Guess what? Your mortgage just went from 5% down to 4.5%. No. Gas just went from $4.50 a gallon to $4.30 a gallon. No. It takes a much longer time for that to happen versus what we see in the banks. So keep that going. Okay, let's get to the poll, and I want to see what you guys are thinking about. There it is. Okay, so there's the poll. So if you guys want to go ahead and click on that. I do believe that we're a little bit pessimistic on Sunday, and rightfully so, nailed it, thinking that, hey, we're going to flush out, go down, and then sometime during the week we'll bounce. So far, we're on our track with that outlook. I believe Corey and Rob are both a little bit more on the bear side. Even with the move up on Monday, Rob came out and was saying, hey, you should be a little cautious. So it's been pretty bearish overall this week. And it's been in line. So if you guys have been bears since last week, you're doing really good. Oh, another I want to make a mention as well. I did not put a lot of bear trades out there because the trades that we looked at last week, all of them are fabulous. Roku and things like that, Coin, DocuSign, RBLX. The reason why I didn't put them up is because they're just falling apart. We'd be chasing them. So as far as a new trade, they're not looking great. But boy, if you guys have been in them in the last week or so, which hopefully you have, you're just letting it work for you. So great work. Okay, cool. 86% voted. Looks like we stalled out there. I won't waste any more time with it. Let's get out and share the poll. You guys are definitely -1. We're leaning towards it. 32% at 0, so -1. Excellent. So looking a little bit more bearish. Probably kind of where I'm at, thinking, hey, we might look to bounce here in a little bit, just due to the fact that we've had such a pretty good move to the downside. All right. Let me close that poll. There's the button. Wow. Go to is being a little difficult today. Okay, so I am pretty much in line with you guys. My weekly outlook is still -1. I think we consolidate here, and if it's a small bounce, maybe it's only today and tomorrow, and Friday we just flush out, or we test the lows here, and then Friday we just have this beautiful relief rally. I truly believe it's going to take some sort of a good number from a larger company or unexpected good news for us to start the spike. Other than that, I think if we continue to see these companies come out and lose and miss and lose and miss, I don't know if we flush lower, but I do think that we stay here at least. So my overall market outlook longer term is without that, and I'm scoring it based on below the 20, below the 50, and so on and so forth. I have to be a -2 with a bounce. So I do believe that we can see a rally here. I just don't know how long it's going to sustain itself. So keep that in mind, folks. All right. So let's get into our sector analysis real quick. And you can see everything's just red. What was really interesting is the communication services down 9.26%. A lot of that has to do with Google. I think Facebook's just getting mushed as well. I think it's going to be a carryover. And then on the strong side is the consumer defensive, which being a down 3.87%, being the strongest. Amazing. Woohoo. But it's a general sell-off across everything. And take a look at this. I mean, materials and energy. That's second and third. Right? They're right behind the communication services, and comm services was 90% Google. So that's pretty interesting to see that this is just a general sell-off across the board. Lightning, I think, of money in. It's not a panic sell-off. It's just, okay, look, we don't expect anything really good going into the beginning of Q2 based on some of the results we're seeing from Q1, right? So let's lighten our load. That's it. Really good move off of the bottom there to end Q1. I don't see the reason why a large fund would risk what they don't have to. So lightening the load, pulling some money out, checking it out. All right, so let's take a look at these. Here is consumer defensive. This is the staples, what we call it. It's nice. It's actually a tradable chart. I like it. It is bouncing off of a rising 20-day moving average support at $78, and it's got an inside day or a pregnant bull or bullish harami pattern, right? So we could see this retrace back up just above the 80 level. Something diagonal would be pretty cool if you guys wanted to play the sector itself. Understand these sectors will be driven based off earnings of the stocks inside of it. So yes, even ETFs move. They don't move based on one announcement, but they will move if we get 2 or 3 bad news or 2 or 3 pieces of good news, so on and so forth. Communication services, just one of those ones that have fallen off. We did have a lot of bearish trades that are directly related to communication services, and they look the exact same, which is why I kind of left them off the bear watch, is because they're already lower. We missed the boat on that. But if you guys want to keep perusing through there, I'm sure there's a lot of bears to find. Okay, so conclusion, expect a bounce today or later this week. I'm going to stick on track with what Darren and Rob said, 100%. Of course, consolidation, at least hesitation, something like that. Profit taking or lightning, I'm going to call that the sentiment. I know the volatility's moved up, and that could just be by action. It could be activity of Google. Google itself could move the VIX up. It's a company that's held in almost every single fund on the planet Earth, and so when they all decide to move out of it or lighten the load, it's going to have an impact on volatility. I know that the VIX is basically specific to the SPY. But the same thing is happening in that docket as well. So keep that in mind. I'm just going to call it profit taking. This isn't a panic sell-off. This isn't fear. This is just a round of profit taking based on events, or I should say driven by news. So it's lightning for now. Inflation remains high. I didn't change anything on the bottom there except for the last bullet point. Earnings season should continue to drive the markets. And it has. Sell on room or buy on rumor, sell on news. We're selling on news. This is very standard. It's a lot of selling, and it's happening quite a bit, but there's a lot of money in these markets. And so I have to agree with what's been said that this is no way, shape, or form close to the bottom, and it is not the capitulation, but it could be a temporary one. So let's play it for now like we did the last one. All right, that's enough. You've heard enough of me. Let's go out and look at your trades. And we'll go from there. Let me get rid of my pin. Let me scroll back up to the questions box. I'll start with Brian, who's got UPS. I did like the Fedex chart. This might look similar, maybe. A little bit, yep. So Brian's got the 6th of May. I move over my recording. So I can get this, which is a week and a half, May week 1, a week and a half from today. A broken wing butterfly 2x3x1, 190. Imagine you broke it to the downside, right? 185, 180. 180, 15, yep. Yeah, 2x3x1, yes. Nice. Okay, I like it. Let me see if we have earnings anytime. Nope, already did. 26th. Oh, yesterday. Okay, yeah. Okay, I like it. Maybe it's just going to hang out right where it's at, he's thinking, over the next week and a half. If not, have it roll down or give it some flexibility if the markets decide to go lower and this takes it lower. That's great. I'll put this on the bear with a sideways. Cool. I like the trade. I like it. Everybody knows I'm a fan of the butterfly anyways. So, thanks. Thanks, Brian. All right, let's get going here. Sebastian's got snap. We're doing a June 30th, May, week 1, 30-24 diagonal put spread. Hoping to sell multiple puts. All right, so he's anchored himself out pretty decent with the 30th of June, right at the strike price is right at the 30 here. Nice starting point, and the idea is to, sell one, sell one, sell one, sell one. Wonderful, nice, great. I like these inside days. Island gaps make me laugh. All news driven. Now this is in a bad sector. Communication services. It's in a bad situation. It's gonna be interesting to see what happens with the Snapchats and Facebook and Google. I mean, now that Twitter's been purchased by Elon, what changes that? Be more competitive. Maybe it'll help. I don't know. Even if they're in the same thing, which I think they are. Yeah, definitely. Let me write that down. SNAP. Cool, Sebastian. I like it. And yes, I hope that you can sell many, many times as that thing goes down as well. All right, Neil, let's look at LSCC. Sorry, folks, I got a creaky chair. 17th of June, 50 long put breakdown of low base with target of 34.5. Oh, okay. Let me zoom in a little bit on this thing. See what I can do here. Oh, look at that. All right, so he's down right around there. Wait, right around here. Okay. Shrink this up a little bit. But I do like this part. I like this breakdown that's happened over the last couple of days. Very nice. LSCC. Semiconductor, huh? You guys are all in the right sectors, that's for sure. All right, Ian. Appreciate the separation. It's nice to put them in one at a time. Then I can read them better. All right. Just for you guys, if you guys are putting in trades, it's much easier to, instead of putting them all in one line, put one in, hit enter, and then put another one, hit return, I should say. And that way they're stacked nicely for me. Okay, so plug has got 29. We've got 29 April sold the 20 strike put. Okay. May 13th bought the 25 puts. Cool. Diagonal put spread. Very nice. Like it. Got a support level there. Good drop off of that. Descending. Falling apart. Breaking support levels. Might hesitate a little bit here right where it's at. But that's fine. Hopefully it rolls over and gets close to that 24 and you can sell again. Let me plug in there as a bear. Okay. And I thought I saw Coca-Cola as well in that line. I just want to double check. I did. Okay. April 29th. This is all going to be in the next few days, folks, which is kind of neat. It's really cool to sell something shorter term, especially if you think things are going to run or drop really quickly. This is a diagonal call spread, I believe. Bought the 13th of May, 64. Sold the 68. 64, 68. Nice and wide. Totally fine. I like it. Both are great. Looks good. Did Coca-Cola announce already? Let's take a look here. Yep. 25th. Imagine they did all right. Food and beverages seem to do pretty good. Although we're not in any sort of recession or depression, but it's so interesting to see when we had, the dot-com bubble burst. Boy, that was back in. Forget about that. How about recent old history? The 2008 financial crisis. Movie theaters did well. What was it? Salon products did well. Hairstyling, anything to do Estee Lauder, stuff like that. Beauty, and then beverages. Coke, Pepsi, alcohol, things like that, snack foods, but and movie theaters. It was just interesting to see that all the creature comforts hung in there. Pretty cool. All right, BG above 121 yesterday. High earnings were today. James. All right, James. Sorry, I'm like if I were closer above 121 yesterday's high. Earnings were today. Anything specific, James, or just basically flat out that hey, this thing's doing pretty good? It had its earnings. Looks like it's going to hang in there, and that's a nice confirmation of a bull pullback. I'll put it down on the bull for sure. For sure, I like that. hmm In the right, consumer defensive. I don't have anything right now, is what James says, but no, that is definitely a really good chart, especially if it's done good. You can wait for the volatility to be swallowed up, meaning the initial reaction so far is bullish. It looks good. However, it might be best just to wait, give it a day or so, and see if it can hang in there. But it's confirming a nice pullback, at least a higher pivot low. Okay, yeah, add it to the list for sure. Thanks. It's a good one. All right, let's do another one here. Agilent. Bear call. May 20th, 125, 120. Okay. Yep. Bear call spread. Just let it stay and die. What do you have this on? The 20th of May. It's okay. I think it'll make it. I like it. I like it. I mean, it might flirt with you. It might come back up here and play that card at the 122, 23, but, then it'll roll right back down. It's a good trade. Moving along. Okay, Joe is watching. PG. Bull pullback. Need confirmation. Diagonal call is worth considering. Okay, I like it. Yeah, okay. Yeah. Let's wait for this to pivot. It'd be nice to see it turn at the 160 mark. The gap down, move higher is promising. It really is. We'll see if the markets can hold. I believe this will. It's a consumer defensive. It's in the right sector. Yeah, wait for one more day, do a candle like that, and then I believe it's 160, 165 might work on that. Excellent. Let me do this while we're looking here. Might as well just scroll down a bit. 20th. Okay. All right, Dan's got Nike. May 20th, 125, 115 bear put spread. 125, right around here. Okay. 115, probably right there. Bear put spread. I'm okay with that. Completely fine. Little inside day today. No harm, no foul. I'm going to echo what Rob and Darren talked about on Sunday. Put on the vertical spread. Wait for that volatility. It might go up against you. It might go down, so on and so forth. Just sit through it and see what happens on the 20th of May. Flat out. Sweet. I'll put that down on the bear. All right, man. I appreciate that. Thanks. Thanks, Dan. All right. Moving on. APO. Bear put. 53.49. May 6th. Week and a half. Okay. 53.49. Good. Okay. Yeah. Mesbin, I like it. Nice. Good trade. Already below the 55 mark. You got the right idea, guys. All these trades are nice. I like it. The vertical spreads, they're either really short term or they're a little longer term. Nothing then in that weird area that we could get caught in a bounce. We're moving in the right direction with these. We really are. what do I know, right? It's just my opinion. Jeez. No, no, no. These are great. These are looking really good. All right. Thanks, Mesbin. Owen. GS. 325, 305 bear put. He's got a couple here. We'll start with GS. 325, 305. Boy, it's going to be hard to draw. Well, let me just... All right, let's do that. There we go. A little easier to zoom in first. Okay, yeah, now I can see a 325. What did you say? 305. Okay. Okay. Not asking for much, considering. And that is expire the 20th of May. Okay, so you have about, let's see where we're at. I keep forgetting, this is the last week of April, isn't it? Okay. 3.5 weeks. This thing could be at 280 by then, and that'd be nice. Of course, you're going to wish you had a bigger spread, but no, good. All right, let me put down GS. And then we're also looking at Lulu. I haven't seen Lulu in a while. What is the world of comfortable spandex pants doing? Oh, not too bad, considering. We've got a 330 or 355, 300 bear put spread as well. 330 down to here. Okay, let's see. I want to get these numbers right. 355. Wait, 355, 300. Oh, oh no. Yeah. Okay. You're biting off a big chunk there, and Owen, and I imagine 355. So you're back up into this area. You're right. You're basically at the money. Okay, you're probably playing an earnings announcement. Let me check it. I would assume. No. I mean, that's March 29th. But, I mean, you're expecting this to fall pretty aggressively, and it's got to close a gap here. You might be a little aggressive with that, unless you're trying to just think this thing's going to fall apart, Owen, and that's fine. I mean, if you guys want to if you want to swing for it, that's fine. And here's why, and I'll use this as this is kind of a fun example, is this really blew the whole pattern, right? So we had this nice descending. Everything was below. Crossover. Something happened that just put this bad boy back up to, you know, the 350 range, 350, 400 range. Now, sure, it's falling apart right now, but, I mean, it's got to get below 340. It's got to get below that 50-day. Then it's got consolidation at 320, and then it'll work its way back to 300. So, I mean, if you really think that that's it, I'm going for it, because I think the 355, 300, you're risking like $1 to make $55 or something, whatever it is. That's fine. But you don't have to swing that hard, Owen. I mean, why don't you do 340, 355, 340, or 355. 340 would be the best, especially if you just think it's going to fall out of bed. And then just do it for, well, I'm okay with it being through May. It just depends on how bearish you are on that. But it's not really conducive of too bearish of a chart right now. Oh, but thanks. Okay, and then one last one. This is on the spiders. Okay. It's so funny that we look at this chart every single day, folks, and we don't trade it every single day. Well, we shouldn't be, but I mean, it is. Sometimes you'll see these great trades right in front of you and not notice. 430, 410, bear put. Okay, it's on its way. Sure. You know, even a couple of days ago, this is confirmed. I mean, it'd be nice. Seeing it sit at the 420s got to get you a little bit nervous. But once again, if we continue to see bad news, we continue to see missed earnings, and this round of profit taking continues, then yes, we could see that flush down to the 410. Or what I expect sometime this year, the catastrophic, oh my gosh, I need the money out now, things are falling apart, margin calls are coming in, I need money out to pay for my mortgage, inflation's not coming down. That capitulation, the spike that I'm saying up to the 50s in the VIX, that will definitely put us there. So I like it. Just depends on your time frame. All right, let's see. Did I cover everybody? I think I did. These are great trades, guys. It's interesting. I like going back through these because I take a look at them and I follow them as much as we can. And you guys, we are definitely in in the 55, 60 to 60% range of nailing these things. So these are great trades, guys. Keep it up. Let me with that being said, let me move this. Let me start typing some stuff. Sorry, guys. All right. Triple check earnings. I try to do my best. It's sometimes fun, and I've said this before. I'll get in the middle of a great setup, and I think it's wonderful, and I've got the right trade on, and I go to hit submit, and I notice that it's usually on Thinkorswim. On the chart, they have that little earnings thing. You're like, oh man, it's got earnings tomorrow, and so either change the trade completely to deal with it, or just move on to the next. Right? Okay. Good bears out here too. Let's see. Nike, APO. Oops. And GS. Yeah, I like that one. Okay, let's see. Let me share this with you. There we go. Hopefully you can see that. And I think I had something that's... Well, yeah, UPS was a kind of a sideways to bear, I believe. So I have it written down as such. So make sure I got them all. I believe I have it. Oh, and then KDP, folks. It's got earnings tomorrow morning. So, but if you want to play it on earnings, yeah, go ahead and take a look, see if it'll break out or down, or if it's going to stay in between. That's kind of funny. But there's that list. All right, guys. Nice, short and sweet. Got her done. Thanks for your participation. If you guys got any questions, you know how to get a hold of us, and we'll talk to you next time. Bye, everyone.